Every day, a ghost currency circles the globe. It exists as light in fiber optic cables and digits on a server, yet it underpins the entire physical world of trade. A shipment of oil from Saudi Arabia to Japan, a purchase of Brazilian coffee by a German cafe, a loan from China to a nation in Africa. As of 2025, about half of all international trade is invoiced in this single currency, even though its home country only accounts for about 11% of global trade volume. This currency is, of course, the US dollar.
The US dollar.
The US dollar.
The US dollar. The US dollar.
By default, made the dollar the global monetary standard.
Nearly 60% of all official foreign exchange reserves held by the world's central banks are in dollars. It is the blood in the circulatory system of the global economy. But blood can carry poison, and systems can fail. What would happen if the world suddenly rejected its reserve currency? What would the world look like the day after the dollar died? This is not a prediction. This is a simulation. To understand the dollar's precarious power, you must first understand the fundamental shift in the very nature of money that occurred less than a lifetime ago. For thousands of years, humanity ran on commodity money, money that has intrinsic value because of the material it's made from. A Roman denarius was valuable because it contained silver. A Spanish doubloon was valuable because it was made of gold. This system had a natural brake on a government's ability to spend. You couldn't create more money without first finding and mining more metal. The modern dollar is a different species entirely. It's fiat money, a term from the Latin for let it be done. It has no intrinsic value. It's a piece of paper or a digital entry. Its value exists for one reason only, because the US government declares it so, and because the world trusts that it will hold its value tomorrow. Its worth is a shared belief, backed by economic stability and government credibility, not a vault full of metal. The story of how this belief was engineered is the origin story of the dollar's power. In 1944, as World War II drew to a close, Allied nations met at Bretton Woods, New Hampshire, to design a new, stable global economy. The system they created pegged every major currency to the US dollar. The dollar, in turn, was the only currency pegged to gold, at a fixed rate of $35 per ounce. Because the US held the majority of the world's gold, the dollar became the undisputed anchor of international finance, trusted because it was theoretically as good as gold. But by the late 1960s, massive spending on the Vietnam War and domestic programs meant the US was issuing more paper dollars than it could ever hope to back with its gold reserves. Nations began to get nervous, and they started asking for their gold back. On August 15, 1971, President Richard Nixon made a shocking announcement. The US was unilaterally and immediately ending the convertibility of dollars into gold.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
In an instant, the dollar became a pure fiat currency, backed by nothing but faith. Yet, it didn't collapse. It retained its dominance due to the sheer size and stability of the U.S. economy and the depth of its financial markets. This gave the United States what has been called an exorbitant privilege. It's the unique ability to borrow at lower interest rates, run massive trade deficits without risking a currency crisis, and easily finance its government spending with debt that other countries are almost forced to buy. It is also the power to deploy financial sanctions with devastating effectiveness, cutting entire nations off from the global system simply by denying them access to dollars. This is the power we are about to simulate losing. Our simulation begins not with a bang, but with a rapid acceleration of trends already underway. From 2023 to 2025, the BRICS nations, Brazil, Russia, India, China, and their allies have been actively working to reduce their reliance on the dollar. They are expanding trade in local currencies, increasing their central bank gold reserves, and developing alternative payment systems to bypass American control. The tipping point arrives. U.S. sovereign debt has crossed a critical psychological threshold, rattling global confidence. Simultaneously, the expanded BRICS coalition announces a new, unified platform for trade settlement, implicitly backed by their vast commodity resources. Several key oil-producing nations, seeking neutrality in a fractured world, announced they will begin accepting this new method of payment for their energy exports. The petrodollar system, the bedrock of dollar demand for 50 years, has cracked. The immediate aftermath is a digital bank run on a global scale. Central banks, corporations, and investors begin to panic sell their U.S. Treasury bonds. The sell-off becomes a cascade. Global trade is paralyzed. Commodities like oil, no longer priced exclusively in dollars, become subject to wild price swings, creating chaos in energy markets. Emerging markets with high levels of U.S. dollar-denominated debt see their liabilities explode overnight, risking a wave of sovereign defaults. As the simulated dollar plummets, you can help this channel do the opposite by hitting the like button. And to protect your portfolio of knowledge from future shocks, be sure to subscribe. Back in the US, the flood of unwanted dollars returning home triggers hyperinflation. The cost of everything imported skyrockets. The phone in your pocket, the clothes on your back, the coffee you drink in the morning, their prices double, then triple. The Federal Reserve, desperate to stop the currency's freefall, is forced to raise interest rates to shocking levels, making government debt financing unsustainable. Credit markets freeze. Mortgage rates become unaffordable, crushing the real estate market in real terms as lending evaporates. The value of your cash savings is wiped out. U.S. stocks may rise in nominal dollar terms. The exorbitant privilege has become an exorbitant crisis. Years 2 through 10 of our simulation reveal a new, fractured global landscape. The dollar is not replaced by a single new currency. No unified BRICS currency has proven imminent or viable. Instead, the world descends into a messy, multipolar currency system. The globe is carved into economic blocks, one centered on a weakened dollar and the euro, another on the Chinese yuan, and a third built around a basket of commodity-backed currencies. In this new world, American power is a shadow of its former self. The effectiveness of U.S. sanctions evaporates as nations can now easily bypass the dollar-based financial system. Nations like Russia and Iran, no longer constrained by the dollar, can trade freely with new partners, projecting their influence without fear of U.S. financial reprisal. The influence of the euro, the yuan, and the BRICS members rises, especially in regional trade and finance, as they build a new infrastructure of power that excludes America. The United States is forced into a painful national reckoning. For the first time in nearly a century, the nation must live within its means. No longer able to finance its deficits with cheaply printed money that the world was forced to absorb, the government enacts severe austerity. The economy must undergo a wrenching multi-decade transition, shifting away from consumption and finance, and back toward production and exports. The American standard of living declines as the cost of imports remains permanently high. The nation's global military presence is dramatically reduced as it can no longer afford to police the world. The age of the American-led global order is over. This has been a simulation. It is a speculative look at a low-probability, high-impact event, but it is based on real trends and historical precedent. For the modern strategist, the key question is not, will this happen tomorrow, but how do I prepare for systemic risk? In a world where the value of fiat currency itself is in question, where does one turn? The historical and modern playbooks suggest a focus on 4 key areas. First, precious metals. For thousands of years, gold and silver have acted as the ultimate stores of value during times of crisis. They are universally accepted, exist outside of any single nation's control, and cannot be printed into oblivion. During fiat currency collapses, their purchasing power typically surges as people flee from paper to hard assets. Second, foreign currencies and equities. A core principle of risk management is diversification. This applies to currencies as well. Holding a basket of other major currencies, like the Swiss franc, the euro, or the yen, can preserve capital if one currency fails. Investing in international companies in stable jurisdictions provides exposure to productive economies outside the immediate crisis zone. Third, decentralized digital assets. A modern addition to the toolkit is cryptocurrency, specifically Bitcoin. Its proponents view it as a hedge against fiat instability due to its mathematically fixed supply and decentralized nature, making it resistant to government censorship or inflation. Finally, and perhaps most importantly, productive real assets. Ultimately, in a time of crisis, real value endures. This means owning things that produce tangible goods or services, productive land and farmland, essential commodities, and income-generating real estate in stable jurisdictions. These assets maintain their value because their utility is independent of the currency they are priced in. The dollar's reign is not guaranteed to last forever. While its collapse is not imminent, the strategies for preparing for such an event, diversification, a focus on real assets, and a healthy skepticism of any single system, are the same strategies that build robust wealth in any environment. For the modern strategist, preparing for the unthinkable is simply the price of clarity. If this simulation has provided you with value, you can repay us in the only currency we accept here, a subscription. Thank you for watching.